everybody. I got one of our partners in the US, Jeremy Terr from Argo Property Group. And Jeremy's been a success of Mada Partner for the last 6, 7 years that we've been investing in Philadelphia. And a lot of people have asked us, why we're investing in Philadelphia. And we're just going to touch base today on a few things, why we like investing in Philadelphia, especially with some of the tax incentive on the municipal side of things, and also on some of the opportunity zones. So I'll let Jeremy talk to you a little bit about what's going on in Philadelphia.
Thanks, Matt. Yeah, we have a few different programs in Philadelphia. One is the 10-year tax abatement program, and it's changed in the last couple of years. Previously, it was that developers who build new construction or do renovation get a 10-year full abatement of that renovated building. And that's over the entire improvement value. So in Philadelphia, the taxes are based on the land value and based on the improved value. So the abatement applies only to the improved value, but it's a significant significant savings to the project. For example, in a new construction building, most of your costs are in the improvement, are in the building. The land purchases typically, maybe it's just 10 to 15% of the total cost. Sometimes it can be a little higher, 20% of the total cost. But that other 80%, particularly if you're doing new construction, gets abated for 10 years. The program has changed this year, so the abatement scales off with each year. Full 100% abatement the first year, 90% abatement the second year, 80% all the way down to no abatement in the final year. So it is worth about 55% of what it used to be previous to this year, but it's still a significant cost savings. And if you think about the tax rate in Philadelphia on real estate properties, it's pretty high. It's a 1.998%. So that adds up to a significant tax bill if it's not abated. And what we are doing is taking advantage of the abatement to do revitalization, renovation, development in mostly underserved communities where you have blight, vacant lots, former industrial land, and repurposing it to residential use, whether it's building home ownership through townhomes or condominiums, or bringing new housing stock through apartment buildings, and also some commercial activities, such as office, retail, self-storage, those other types of uses for underutilized properties. So that's a big program that's specific to Philadelphia. Other programs have something similar, whether it's some kind of special economic zone or special development zone. They'll often use taxes as an incentive for the businesses to invest and do capital expenditure there. Another program at the federal level, so it doesn't just apply to Philadelphia, but it's across the whole country, is called the Opportunity Zone legislation. And that's very important too. It is an incentive program that provides a deferral on your capital gains tax. So if you had sold stock, or if you had sold an apartment building that you held for a few years fully rented, and you have the capital gains coming out of the sale of stock or that sale of that rented apartment building you had been holding, you can reinvest it into a census tract, a part of a community that has been designated by the Treasury as needing more investment, and those are called opportunity zones. So inside of those zones, if you invest your capital gains, you are able to defer the tax. So you defer paying the tax until December 31st, 2026. You then have to pay the tax, but if you held it there in that investment for 7 years by then, you can have a step up in basis of, I want to say it's like 10%, or if you hold it for the whole 10 years, you get 15%. I may have that wrong. I'm neither an accountant nor a tax lawyer, but it's a significant savings on the taxes that you have to pay when you invest in these qualified opportunity zones. So we have many of our projects located in opportunity zones. It doesn't apply to a townhouse. It's really a program designed to incentivize long-term investment activity for those investors to stay invested into that area. So it's a 10-year program. And at the end of 10 years, if your building was worth $100,000, now it's worth $1 million, you aren't exposed to the tax on that appreciation either, which is the biggest part of the benefit in the program. So both of those programs, both at the city level through the tax abatement and through the opportunity zone, are significant enhancements to investing in real estate, and just additional examples above the ones that we all have heard about, like depreciation and accelerated depreciation through like a cost segregation study, and all the benefits of investing in real estate on a accounting versus cash basis. So,
and a great thing too about that in Philadelphia, since we're coming from Canada, is you can combine the municipal and the federal program together on one project. So if you have a long-term outlook on it, you're able to benefit from both programs as an investor, which is pretty amazing too.
Right. So I'm not a tax lawyer or accountant, so I only know about U.S. taxpayers and U.S. capital gain, and to the extent that I am participating in those programs. But just as you said, Matt, at the municipal level, you have the tax abatement program, and then at the federal level, you have the capital gains tax deferral program. And using them both together is a big uplift. If you just look at the opportunity zone program, you're typically looking at a 0.5 to 3/4 point increase in your equity multiple over that same investment timeline. And what that means is if you were going to get a 3x, or let's just say a 2x on your invested capital over that 10-year timeline, you're now looking at effectively a 2.5 or 2.75x return on your money because of that tax program, the opportunity tax program. So it's a big incentive to invest in those underserved areas and stay invested there for that full 10-year period.
Awesome. Well, thanks for sharing today. And if you guys want more information on what we're doing, please feel free to reach out to us at madapartners.com. Thank you.